Good morning. Today is Friday, the last trading day for the week itself. The date today is December the 15th. The time right now is 9:12 in the morning. Overnight, we can see equity prices continue to rally on the back of the FOMC meeting that ended 24 hours ago. We can see that the sentiment right now is very, very bullish. We can see that the Fed has actually signaled that it has reached peak interest rates and is looking to cut interest rate going into 2024 as much as 3 times for a possibly 75 basis point cut going into 2024. Not sure when they will start cutting interest rates. The best estimate is that they will start to do so as early as in January. The less optimistic one will be looking at May of next year. But anyway, the sentiment has been changed and the market right now is super bullish on the idea that lower interest rate is good for equity markets. However, I have a different take on it. And I always believe that the reason why Federal Reserve cuts interest rate is because they feel that the economy is in trouble. Okay, so that should not be a reason to celebrate. But again, right now the market sentiment is so buoyant, everybody is ignoring all the risks and looking to take the market ever higher. The Dow Jones has traded to an all-time high, as we all know by now. The high traded overnight was 37,287.5 in the cash index, and this is above the last year high of 36,952.65. Now this is an ongoing development. We will see how far this thing can go. In the futures contract, we can see that the futures has actually been even more bullish. In fact, the market started to break all-time high just days before the cash index take out the high. Now we can see the high trader is 37,696, and the immediate target is probably about 38,228. This is based on an equality move from way back, okay, when the market actually bottoms out in October last year. So anyway, look out for a challenge of 38,228 in the futures contract. In the S&P 500, the cash index has yet to break an all-time high. The all-time high is at 4,818.62, which is based on last night's high price for the year at 4,738.57. We are about 80 points away from taking out the all-time high in the S&P 500 cash index. In the futures contract basis, the micro E-mini, we can see the highest traded is 4,791.75, and we can see that it is just barely a hairbreadth away from the all-time high in the futures contract. It's yet to be taken up, but it's getting very close. And the high level traded in January the 4th, 2022 was 4,808.25. Okay, so like I say, it's a hairbreadth away. In the Nasdaq is even further away from the all-time high, but it is not by very much. You can see they have closed the distance. In the cash index, overnight highs is 16,660.71, with the all-time high traded in November of 2021 at 16,764.86. This is about maybe just marginally above 100 points away. So we will be very interested to see whether the market will actually take out those highs. In the futures contract, again, the futures is leading the pack. Futures has already taken out the all-time high at 16,885.5. The high previously on November 2021 was 16,767.5. So we can see very much like the Dow Jones before the break of the all-time high, the Nasdaq 100 futures is taking the lead. But it is very interesting because the Nasdaq, the market actually closed weak last night. Okay, tonight is going to be very interesting. Tonight we have the triple witching day, which is a occurring every quarter in which stock options, futures on equity index options, as well as option on futures all expires at the same time. Now, the notional value for all of this is $5 trillion. So that's massive, and because of the volatility that is expected to be created as a result of the option expiration, or at the same time, be prepared to see wild move going into tonight's trading, especially towards the midday itself. So do watch out for the triple witching day, which is traditionally has been very volatile. For all I know, it could actually cause a reversal in prices. So just watch out for that. Okay. And in Asia, we can see that in the Nikkei 225, prices are beginning to roll back, because yesterday, 24 hours, not 24 hours, in the immediate aftermath of the FOMC meeting, which was actually announced at 3:30 p.m., 3 a.m. Singapore time on Thursday, we can see the reaction in Tokyo was actually not very bullish. In fact, the market actually came down in the Nikkei 225 futures traded at Osaka to as low as 32,420. And this is definitely have a lot to do with the uncertainty created by the Bank of Japan meeting next week, in which previously, just about 2 weeks ago, the deputy governor as well as the governor of the Bank of Japan has actually signaled a potential change in monetary policy, which could actually be detrimental to equity markets in Japan. And because the negative interest rate in Japan pursued by the Bank of Japan since 2006 has actually caused the yen to tumble. This year, we can see dollar yen went up to as low as 152 before it actually reversed direction. And this is causing the yen to be the favorite funding currencies. And a lot of all these loans that has been taken out against the Japanese yen has offloaded into equity markets across the world, including the Japanese equity markets. So a change in monetary policy could actually unwind all that. And that's the reason the market is very, very cautious going forward. But tonight, this morning, you can see the Nikkei actually worked up and had decided that it is best to trade to the upside. And the high traded so far is at just marginally at the 33,000 levels. So we will have to see whether this is enough to propel the Nikkei to an all-time high, which is traded for the year high, at least for the year high, at 33,950. If the market wants to go, 2 weeks is more than enough time for the index to actually climb 1,000 points towards this level. Okay, let's watch out. Okay, and in Hong Kong, we can see prices has actually rebounded. The Hong Kong Hang Seng Index actually bottomed out just under 16,000, and high traded is at 16,727. And of course, this is based on the good news that one of the largest property developer has actually paid off its yuan loan in full. And that has actually caused a return of confidence of sort to the Chinese mainland stock market, and this is of course having a spillover effect on Hong Kong equity markets, and the Hang Seng has actually reflected that. So we will have to see if this has enough momentum to go above the November close at 17,073, and if it can, then of course there will be further upside. But if it can't, then everything will unravel in the days ahead. Okay, in the dollar index, you can see dollar has gone to the dogs. Just 2 months ago, on October the 3rd, we can see that the dollar index was trading just marginally above the 107 levels. And 2 months and 1 week later, we can see the dollar index is almost challenging the year low. At 101.39 is the low traded last night. And this is, of course, a far departure from where the market was just 2 months ago. And the high traded here was at 106.98. We can see that this move here is actually extending and perhaps even accelerating. And the low last night is actually very interesting because 101.39 is exactly the 200% decline of the initial drop here from 106.98, and the level is 101.37. So the low traded last night, 101.39, is as good as hitting this target, and I won't be surprised if we do get a technical bounce, at least in the near term, especially considering the triple wishing day effects on across all markets. Okay, so we could see a bit of correction going forward into tonight's trading. So watch out for that, because the triple wishing day do have an impact on markets. And if that's the case, the euro versus the dollar has actually been flirting with a year high. Overnight high is 101.09. Okay, so this is not far away from the high here, 110.17. So we can see that the market is definitely challenging this level. So far, the market is within this bracket of prices at 109.9 to 110.17. We want to see if this market can actually, this range of prices can actually cap further rise in the euro versus the dollar. It's a good candidate, but let's see what happens. Okay, in the sterling is so strong right now. It has taken out the 127.33 high, which I mentioned yesterday's update, and this is no surprise. Upside target is about 128.40 level. So again, top sides could be getting a little bit restrictive, and we would like to be careful about chasing this market ever higher. Dollar yen has also tumbled together with the dollar index. We can see the dollar yen rate at 140.95 is the lowest we have seen since the market peaked at 152. So this move here is definitely an accelerated move. Okay, maybe I can do this. I can actually expand this to include the 200% move. okay, and the market is right now smack in between this level, between 140.23 to 142.05, and the low at 140.95 is definitely within this bracket of prices, which also incidentally falls within an order block of 140.69 to 141.12. Okay, so there is a possibility of a bounce at least in the near term. In the Aussie, we can see Aussie also took to the high very much in the manner of the sterling versus the dollar. The overnight high is at 0.6729, and this is again hitting into a bracket of prices, may actually be a pocket, okay, of resistance. The level is 0.6712 to 0.6740, and the prices has been struggling since nearby there is a order block around here, which is just going to be within the area. Here, let me see where the price is, just underneath the 0.6708. Okay, in dollar Canadian, we can see dollar Canadian is also reflecting what we are seeing. Dollar index is generally a sell-off in the dollar. We can see the dollar versus the Canadian dollars actually decay all the way to 133.94, which is the low. And this is definitely very far away from where it was just 2 months ago at just under 139. So we can see this has moved 600 pips in just over 2 months. And this is massive. And over in the precious metal market, we can see that gold prices is definitely a beneficiary of the sentiment right now, in which is favoring lower dollar rates, and we all know dollar move inversely opposite of gold prices. So long as the dollar remains weak, there is the scope of a further gain in oil in gold prices. However, what we want to note here is that the prices is currently at a level that is pretty sensitive, because the drop from 2,149, okay, to the low at 1,973. Let me put up the 50% mark. Okay, the market has probably hit the 50% mark, and this is where we want to be cautious. Okay, 50% mark is just at 2,061, and we are not that far away. And we will have to see how the market behaves, because currently the market seems to be caught in a struggle right now, with the high at $2,047.90, and whether or not it has enough momentum to go even higher. But I think the market, technically speaking, should be trading lower, in my opinion, because this drop here does not look to be over just yet. I think there is another leg to the downside. If that's the case, we'll be calling for lower prices in gold towards the end of the year, perhaps even to the early part of next year. Okay, this is the silver. Silver has actually hit a bottom at $22.49, bounced up to overnight high of $24.21. And this is also very much in the same manner as what we see in the gold market. This move here has hit the 50% right on the dot. The 50% mark is $24.20, and the overnight high at $24.21 is exactly where the market hit the 50% mark and is having a reaction. So here it will be very interesting whether it can hang on to its gain from $22.49 remains to be seen. But technically, I do believe the market has hit a technical chart point, and it's possible for the market to unravel and take out the $22.49 over time. And in crude oil, we can see crude oil managed to bounce off the low finally at $67.68. That happens just before the FOMC meeting on Wednesday, and the prices traded has been very good, because we have taken out a nearby swing high at $71.92. Now, this is crucial because there is a break of character here. The prices has been coming down, but of course the key level will be $79.56. This will be the key level to watch, whether the market have enough momentum to go even as high as $79.56 remains to be seen. But however, this is a positive development. So far we can see that this is the first leg of a technical rebound. If we do see a pullback, the pullback should be corrective in nature before we go up to $75 and maybe to challenge the $76. Okay, this will be the first level in which I think the market may be kept. Okay. And over in Bitcoin, we can see Bitcoin remains very well beat. You can see the price went up to a low of 40,234 before rebounding together with equity index on Wednesday. The high traded so far is 43,429. And then, of course, overnight we have a pullback to $41 and 41,535, and this market is primed to to try higher. And if the market can actually trade to 44,715, there's a possibility of a break above this, because overall Bitcoin momentum suggests that this move on 44,715 is actually a counter trend, and the scope for a challenge of 48,000 to perhaps $50,000 remains very much in focus among traders, especially with the prospects of an early approval of the spot BTC ETF license as early as January. This is actually what is keeping the market players very, very bullish on digital assets, in particularly Bitcoin. So this is all I have for you. I wish you guys a great weekend ahead, and I'll come back to you on Monday with fresh updates. Bye-bye. Take care.